Alrighty, hello everyone, and welcome to this week's weekly market recap of the US markets. And another fantastic week we've had this week. The S&P 500 was on an absolute rocket to the moon this week, hitting not only hitting all-time highs, but absolutely blasting through the roof to an all-time high of $4,352. An absolute crazy week, fantastic profits, and fantastic opportunities that were presented this week. Hopefully you took some of those opportunities and made some money. So without further ado, let's get straight into it. So looking at the chart here, I've got the S&P 500 up. And as you can see, the vertical line here being the start of the week last week, and the horizontal line here being the all-time high that we've achieved this week on Friday, and the channel that the S&P 500 is following at the moment, that upwards channel there. So as you can see, over the last few days, only one red day, that looks to be Tuesday. Yep, was Tuesday, only a very, very slightly red day there on Tuesday. And then Wednesday, Thursday, and Friday, huge candles towards the upside, with the candle signaling buying all the way up to the close. As you can see, if I move this out of the way, you can see the little green dotted line here, right at the top there. A little bit of a wick there, but not much at all. So some strong buying there on Friday, before heading into the 4th of July weekend. So that's promising for next week. And historically, the 4th of July weekend, the week after that, has been fairly bullish. Now, because I've said that though, most likely it's going to go the other way, Murphy's Law. But anyway, we'll see what happens. The only thing I'm a little wary of at the moment is how far and how fast we're moving away from the 50-day moving average here of the S&P. You see the blue line here. Having a look at the previous move away from the previous big move away from the 50-day moving average at this point here. As you can see, it moved up thick and fast, but then we saw a fairly decent correction, where people started to panic a little bit. We came back up and then back down, and then we started moving back upwards again. So wouldn't be surprised to see a bit of red coming into the markets over the next couple of weeks. Just make sure you protect your profits, and make sure you got your stops in, and don't be getting too trigger happy when we're reaching these sort of overbought levels. Could it keep going further? Absolutely could keep going further, but we sort of just want to be wary. We don't want to be too scared that we're not taking advantage of opportunities, but we don't want to be over leveraging ourselves and taking too many positions that if a correction happens, we're going to it's going to wipe out all the positions that we've got. Okay, so moving into the indices for today, because it is a Monday. So the Asian markets were open, but US was not. Asian and Europeans are open, but US markets closed today. So Australia did well. S&P 200, ASX 200 up 0.09%. They're not fantastic, but still in the green. Same with New Zealand. We've got the, let's see what else we got. We got the DAX up, we got the FTSE up. What else? Pretty much all of these European markets are in the green at the moment, aside from Switzerland. And most Asian indexes up for today as well. As you can see down the bottom here, we've got the Nikkei. The Nikkei was down a little bit, 0.64%. possibly a catalyst for that, because that's quite a fair move. Shanghai up 0.44. Most of the Chinese indices up. Hang Seng down a little bit, 0.36. Taiwan weighted, Korea, India Nifty 50, and the Vietnamese markets as well. So a fairly bullish day all around for major indices. A couple of reds here and there. So hopefully this carries into the US markets for tomorrow. Looking at the economic calendar this week, couple of things to watch out for. We've got job openings on Thursday, with the Federal Reserve meeting minutes coming out on Thursday as well as initial jobless claims. So I would probably I'd probably be wary trading around Thursday and Wednesday evening. Just be careful. There could be a bit of volatility in the market on Thursday and leading up to that as well. And then Saturday, the Fed monetary policy report is released. So that will be interesting to see what they bring out with that. Moving into sectors, we've got energy at the top there, making a bit of a rebound, as you can see, and a tiny little bit of a sell-off there at the end of the week. Probably just a bit of profit taken after this big move back to the upside, sitting at plus 44%. Then we've got financials taking over real estate. Real estate taking a bit of a hit over the last couple of weeks. It was doing fantastically. Probably just sort of making a bit of a correction after this big move you can see here. Remember, each time my cursor goes across the graph here, that represents one trading day. So a fair big move to the upside, as you can see in this sort of area here, and probably just seeing a bit of a correction. We're not seeing a massive sort of downward curve on this sector. Then we've got so financial sitting just above that, sitting sort of flat for the week, but making a bit of a recovery after this big sell-off here. That's mainly due to a lot of the banks passing the government's pressure tests, and so confidence is coming back into those securities. Next, we've got communications and internet services moving its way up nicely from this sort of plus 16.4% region up to plus 21%. So that's a fairly nice move that's made over the last couple of weeks. So stocks in that sector, keep an eye on. Okay, next we've got industrials up 16.5%, with the S&P lagging just behind that 16%, almost flat. We've got materials after that, XLB taking a bit of a dive from the start of June and sort of consolidating a little bit around that plus 14.5%. We've got healthcare up 13%. Oh, sorry, we've got tech above materials there, XLK plus 15.26%, chasing down the S&P 500. They've been doing well over the last couple of weeks. The tech sector, I remember doing this webinar just a couple of weeks ago and not saying as positive things for the sector, but they have recovered nicely, as tech usually does. Next, we've got healthcare, as I said, up 13%, making a nice slow move to the upside. And at the bottom, as usual, utilities sitting down there at plus 2% for the year. That's pretty woeful. Yeah, I'd be careful with what you're investing in that sector, especially at the moment. I mean, it could be a good time to buy, but this seems to be a longer sort of trend here at the moment. So from the 20th of April, we were sitting at a high of plus 7.9%, now down to 2.11%. So I'd maybe look for the trend reversing before getting into that. But yeah, it could be a good time to buy if you're bullish on the sector and the companies within that. Okay, let's have a look at inflationary measures for this week. We've got the gold ETF at the top here. Seen a bit of a gap down mid-month in June, and sort of consolidating around this area here. Something to watch out for will be the break to the upside of this 168.1 area there. That's the relative high over the last couple of weeks. If we see a push through that, we could see some selling in the market. And at the bottom here, we've got the 10-year treasury yield slowly making a downward slope towards slowly making a downward slope from a high of 1.77%. That's when people were panicking, down at 1.4 at the moment. So going into next week, keep an eye on this. As I said, we're quite far away from that 50-day moving average on the S&P. So if we see that those treasury yields start to move up, I'd be guarding those tech positions especially. Okay, let's have a look at open this week. With three positions in the trading community open this week. 3 core positions. I'm not disclosing smaller time frame trades, and not sort of disclosing the options trades that we make in the group. Either it's a little bit too much to explain, and they are a lot more leveraged than just core positions. So we'll leave that for now. If you guys want more info on that and you want me to break that down a little bit more, you can either join the trading group, the Alpha Traders trading group that I have set up. If you want more info on that, please just send me a message or comment on the video, and I can give you some more info about that, or you can ask me directly and I'll try my best to explain to you. Okay, first up, we've got Boeing that we opened. And we opened this down here at the bottom of this sort of channel that you can see. We can see the upwards sloping trend line there. We bought around this area here, around the 238 mark, I believe. And things were looking good. And then we had a cargo plane crash in Hawaii into the ocean, which is not fantastic, but that's fine. It's a solid company. Things starting to open up around the world, and orders are sort of pouring in thick and fast for planes. So yeah, one bit of bad news for now. We'll see how it handles it. I'm holding firm for the moment, and it's still got quite a long distance to go to get to the area it was before COVID. So I'm pretty confident in that position still, even with that news report. Okay, next one, Walmart. Great company, can't really go wrong. Short term, it is making a bit of a downtrend. This blue and red area there you can see is called the linear regression line, and it's just sort of an indicator that measures the mean of a stock's price movement over a certain period of time. And I've got 250 days, I think I've got in there, or 200 days. Let's have a look. Yeah, I got 200 days in there. Yeah, I've got 200 days in there. So that's the red dotted line in the center is just the mean of the stock movement over that period of time. And so I bought in on this, just sort of riding the momentum upwards. As you can see, the upwards slope and trend line here broke here, moved to the downside a little bit, and started to move back up again with fairly decent fairly decent green candles there, and a really nice couple of volume bars there when we bought in. Doing okay for now, not fantastically, but another company that I will hold for long term. Yeah, it's a fantastic company. It's not going anywhere. So not worried about that one either. Okay, ASTS. Now this is a bit of a different position that we opened on this one. As you can see, it's a bit of a funny one. Before this area here in December of 2020, the stock didn't move very much, as you can see, and then we had this sudden rocket to the upside, reaching a share price of 26 from an average around 10. So that's a fairly decent move that happened over the next few months. Sold off quite a fair bit and below the previous average, as you can see here at this point here, and then sort of started making its way towards the upsides. We've got a fair bit of news coming out with this company, and a fair bit of sort of partnership stuff going on. So we've got Vodafone. That was the big catalyst, I would imagine, for this move to the upside. And we got a Deutsche Bank buy rating on the 1st of July. That was this, I would imagine. Oh no, that was around that area there. So that's where we see this big movement to the upside there. But the idea with this one, so we bought in at 14 something, so we bought quite high, but the stock isn't super high priced, and the volatility at the moment is quite high. So the idea for this is that I purchased 100 shares, so that's $1,400, and against those shares, I'm selling options contracts, so selling call options mainly. Have sold a couple of puts on there at quite low prices just to get a little bit more premium while the implied volatility is high, but mainly selling covered calls on that positions to bring in income while the volatility is high, and at strike prices that if the stock were to reach it and get closer to the expiry where the extrinsic value decays away, that the shares will be called away at the strike price, and I'll make a profit regardless. So with those covered calls, I've done them a couple of times over the last week. Just rolled them into new dates and expiries, and my cost basis has gone from around 14 to about 13.2 or something like that, or 13.3, which is great so far. The stock's sitting at 13.13, and then the mean is around $10. So a couple hundred, even if it moves back to that sort of average price there, a couple $100 of premium collected, and basically will end up with a profit regardless, as well as all the credits. But as I said, options are a little bit more complicated, so please don't trade them if you don't understand what they are and how they work. They can end very, very badly. Anyway, moving on, a few of the stocks I'm looking at for this week. Okay, so was that 13? Yeah, I got 13 here for you. There's a few more, but these ones are sort of the main ones I'm looking at the moment. So Berkshire Hathaway, taking a little bit of a dive here down towards the bottom of the channel here on the linear regression line, and started to make a recovery towards the upsides. We'll see how the volume plays out next week and how the general market plays out for this one. But seems like a healthy bit of a correction there, and moving back towards the upside there. Simple. Next one, Cisco Systems. Again, took a little bit of a downturn here. and now starting to follow this trend line towards the upside, respecting it very nicely, and the 50-day moving average there as well. Disney, now you might look at this chart and go, what the hell's going on here? But I'll explain it all for you. So at the top here, we've got the relative high, whether it's all-time high, I'm not sure. I think it might be. Yeah, looks like it is. Yep, so the top line is the all-time high. Then we've got the downward sloping trend line there, as you can see. That's just where the recent highs have touched. Now we've got the next line here. This is the current high that if we push higher on with Disney, it could signal a trend reversal. Obviously, this short-term downtrend reversal. The major trend being upwards, as you can see from the linear regression line here, or the linear regression channel here. And then we've got the upward sloping trend line here, just displaying the higher lows, as you can see. And then we've got two lines at the bottom, just representing the two areas of support or the supply zone, basically. So we've got this area here representing where this sort of candle ended up, as well as the bottom of this area here. And then we've got the second line here where this candle ended up and where this one sort of passed through and hung around. So there are two sort of areas of support that I was watching, but looks like it is starting to move towards the upside. So that could be a good opportunity. I do have an option position in Disney at the moment. Hopefully things will come to fruition and it will get a move on towards the upside for me. We'll see how we go. Enterprise, now I mentioned this last week after the big dip. I don't know why I didn't buy, but anyway, I'll be looking to get in. Still a fairly decent price there, and long-term moving towards the upside. So even if it does take a bit of a dip, chances are it will come back nicely. Okay, Ford, keeping an eye on this after building that flag there that you can see. Big move to the upside. Lower highs, higher lows. We'll see who wins, the buyers or sellers. And we've got relative support and resistance areas. HP, okay, moving nicely. Have a look at these candles here. There's about 5 or 6 green candles there, moving up nicely. Yeah, volume isn't great. So see what happens with that one. Let's see if it can sustain the move past this this relative high here for this little section of candles here that after the gap down. If it moves nicely above 30.83 or 31 basically, with decent volume, might be a buy there. Obviously, once I sold out below this area here, below this support area here, the support line, obviously after I sold my position, it started to move to the upside, because that's just how it works. Next, IBM, huge big sell-off there, big huge green candle. Let's see if people buy that up nicely, and that is just due to the, I think it's CEO step down. So look. The president's said he's going to be stepping down. President of the company. So nothing changed about the company, just the president stepping down. So the operations haven't changed, but obviously the way that the companies run will change a little bit, and that can create uncertainty. Hence why there's this sell-off here. Okay, Iron Mountain moving up over the long term, as you can see, taking a little bit of a beating, coming into these supply zones here. As you can see, it's respected this support region very nicely. It's starting to move towards the upside. Snap on after a big sell-off here. I'm not really sure what happened. Maybe that was it. 9th of June. Not really sure what happened. No news there, but yeah, big sell-off. As you can see, multiple red candles. Sort of found a bit of support, found some supply, and started to move up. So yeah, that one's looking quite nicely. Let's hope the move keeps moving towards the upside there. All right, Whirlpool, same sort of thing. Big sell-off. Found some support there down near the 200-day moving average, moving up nicely. Also, 200-day moving average sitting around the bottom of that linear regression channel. Western Union taking a bit of a beating, starting to see a bit of buying coming in. If it can sustain it and probably push past this sort of price zone here, the 23.75 area, we could see that move nicely towards the upside and change that short-term downtrend there. Campbell's Soup, far out, missed that, my bad. Okay, Campbell's Soup Company, obviously, as you can see, it's clearly ranging and has been for a while. It's probably one of those companies that doesn't move doesn't move a whole lot. As you can see, it's come down quite a bit though from the highest up at 64, but that was a long time ago. 2016. Move down, sitting in fairly decent zone, not oversold, not overbought, but the company's not going anywhere. We've seen a lot of good earnings reports, bit of a miss on the last one, hence the gap down, and a couple of misses back there in 2016, 17 wasn't a great year for Campbell's Soup, but ever since it's been good until June of this year. But I like it at that price. And then finally, we've got SBGI Global Inc. Okay, basically this one, as you can see, it's just got a blue flag here next to the symbol name. This is a trend following approach for this one. And the main thing with this one, you can see it's at the top of the linear regression line here, but have a look at the volume that's come in over the last couple of months. A lot more than back here, where the stock didn't do a whole lot. So volume's still there. Can it sustain its move to the upside, especially before earnings in 24 days? We'll see. So yeah, I'll basically see how that moves before making a decision on that one. So those are the stocks I'm watching for this week. Hope you got some value out of that for today, and hopefully you've got a couple of stocks there that you've added to your watch list. Hoping for a green week next week. Let's hope the buying keeps continuing to come in and people don't start getting worried too much, especially in the first couple of days at least, so we can capitalize on some of those opportunities that I've just mentioned there. However, just keep those things in mind that I mentioned at the start, how we're moving further and further away from that 50-day moving average. Something to be wary of. Other than that, have a great evening and day tomorrow, and we'll see you next week. Thanks, guys.